All right, so on this first screen of the short version of the application, you're going to fill out information connected to the household contact. So the name should already be populated, as should the phone number and the email address. You can select different preferred written and spoken languages if the consumer would prefer. And then we have two very important boxes underneath that. So the first, if you check Go Paperless, the consumer will be communicated with via healthcare.gov to the email address that's indicated in that box. So if that's what the consumer wants, make sure that's their preferred email address. So if we used one of our ICT emails to create the account, we need to change that to the consumer's email address. But if that's the case, we probably don't want to make this consumer's notices paperless, because it might mean that paperless is not a good option for a consumer who's not very technologically experienced or savvy. So for a lot of our consumers, that might not be the best route. So double check that they would be okay with logging in to get those notices as opposed to receiving those by mail. The second box will be something that every CAC needs to be aware of and needs to check. So checking that box will open up a couple of fields, allowing you to enter your information. So your first name, your last name, a drop-down menu of different statuses. So selecting that you're a certified application counselor with Foundation Communities, and then you will enter your CAC number, which will be given to you when you first start volunteering, after you've attended one of our all-day trainings, and after you've completed your CMS online training. That is the only place you will enter the complete CAC number. Usually we just have you go with the last three letters, but that will be on your certificate and should be fairly easy to enter. If you are completing the application after another certified application counselor, maybe you're updating it or something, the last CAC to touch the application, their information needs to be in it. So you would need to replace Elizabeth Colvin's information with your own information here if you were updating the application after her. Below that, you're going to enter the consumer's home address, which may already be populated from verification, and that should be where they live and expect to receive services, what defines their network in terms of the plans they're offered. So they can use a separate address to receive mail at, but they need to make sure that the address under home address is where they reside and the area in which they expect to make their medical home, in essence. Below that, you are basically going to recheck and update information. If you're applying for the individual listed, include their social. If not, skip the social. There's a spot to record the date of birth and whether the consumer is male or female, and then there's a box for race ethnicity, which you can certainly skip to save time. The next screen will allow you to enter the income information, and you'll notice that this is very similar in terms of a list to the list that you have on the tracking sheet. So select whatever categories apply and then whatever income you and the consumer have talked about. They could, of course, have more than one. So keeping in mind, as we mentioned earlier, please use monthly or yearly when you're estimating income, because if you use hourly or twice a month or every 2 weeks, the application will recalculate the income, and it may, or definitely it will not take into consideration the number of weeks the consumer has off and other factors that you probably utilized when you came about estimating this income. So use monthly or yearly. And we mention monthly because for the self-employed, you are required, the application requires you to use the monthly amount. So if you came up with an annual estimate of what the consumer expects to earn in self-employment, just divide it by 12 so you get the monthly amount. Be aware again that the application allows the consumers to use their self-employment income after expenses. So when you enter the self-employment income, it's the amount, the profit after expenses. If you're working with a consumer who's looking for work but doesn't yet have a job, don't enter job, because then you'd have to name a job the consumer doesn't yet have. So for a future job and anticipated income, a good idea would be to use self-employment as a category. This question is a little tricky. So obviously when it comes to expenses, we've already deducted those from the self-employment income. And that's not actually what this question means. So this question tends to be about the deduction of student loan interest, which is a valid deduction. However, we have very, very rarely, I would in fact go so far to say next to never, encountered a consumer who is aware of what they're paying in interest on their student loans. People know the full amount that they're paying each month, but they don't know what percentage of that is principal and what percentage of that is interest. And the only part that counts as a deduction is the interest. So unless you had someone with you that had the form specifying exactly how much interest they were paying, and they will never have that, we make it a policy to answer no to this question because people tend to over deduct and wind up with a much lower income estimate than they should because they don't know how much of their student loan is interest and how much is principal. So for this, always answer no. So there are a couple of questions here related to Medicaid and Medicare, and these are all three optional questions. I would recommend telling the consumer that these are questions connected to Medicaid and Medicare, which we know you already have, or we wouldn't be doing we know you don't have, or we wouldn't be doing a marketplace application and you're just going to skip them. The reason I recommend this is if you read these questions, they sound very subjective. The first says, do any of these people have a physical disability or mental health condition that limits their ability to work, attend school, or take care of their daily needs? That verbatim sounds like the consumer is going to be offered up some sort of daily help, and who would turn that down, right? It's a rather misleading question. What it's attempting to do is get the consumer to confess to being enrolled in or having been found disabled, which is not going to be the case for the consumers we're enrolling in the marketplace. So I summarize those as Medicaid, Medicare questions that do not apply to you, and I will skip through them. They are all optional. There's another kind of misleading question here. Is this consumer currently enrolled in health coverage? The temptation may be to select yes, especially if they're currently enrolled in a marketplace plan when you see them, but there will be a parenthetical amendment to that says select no if the coverage is ending before this date, and it should give the end of this year. What this question is trying to do is get the consumer to confess to an offer of coverage because of course they're not eligible with an offer of coverage, but this has nothing to do to an existent coverage they have through the marketplace. So for the most part, their plans are going to be ending with the calendar year. So because their plan is going to be ending 12/31/2017, you want to answer no to this. The next question is about whether or not anyone in the household was found ineligible for CHIP or Medicaid in the past 90 days. If the consumer lets you know that, you should be fine to answer yes. It's not very usual. But if that is the case, the consumer's child may not need to go through Health and Human Services first before getting to enroll in a marketplace plan. So if they attest that they have been denied by Health and Human Services in the past 90 days, you can check the box for those eligible. And of course, Health and Human Services has a record of this, so there's little to be gotten by checking yes if the answer is no. So at the end here, we'll have a list of questions that may sound very applicable. Things like, did anyone listed lose coverage, or will they lose coverage? Did anyone get married or move, released from incarceration, a change in eligibility, etc., etc. These are all questions for outside of open enrollment, because the only way a consumer can enroll in health coverage outside of open enrollment is with what's called a life change event. And these are the questions that open up that ability and require the consumer to provide proof. So these actually could in theory apply to your consumer. Maybe your consumer did move in the past 60 days. But what will be achieved by answering yes is opening up an enrollment period, which we already have because it's open enrollment. I let the consumers know these are life change questions that would let us enroll outside of open enrollment. We're during open enrollment, so I'm just going to skip these. All right, so at this point, you will be able to look at a summary of the application. What I highly recommend is pay most attention to the fact that things are spelled correctly and entered correctly in terms of the name and the address. I wouldn't review the entire thing with the consumer. I recommend being careful at the entry stage rather than the summary stage, because sometimes the summary is a little bit different looking than what you've entered, and it can cause concern that it doesn't need to cause. So review that the names are spelled correctly and that the address is correct, but otherwise scroll through relatively quickly. There are some questions at the end of the application that can give pause. These are all listed on a document on the resource page with an explanation for what they mean and when they're relevant. There are a couple connected to Medicaid, and the reality is most of our clients are not applying for Medicaid and they don't have anything to do with this application. There are two questions, one that has to do with updating the program if anything changes, and it advises them to call the marketplace. Please encourage the consumer not to call the marketplace, but to come back to us if they have questions or updates to make, because the marketplace will just make those without thinking through the repercussions. And we definitely encourage the consumer to make an informed change and not just change something on the application and see what happens. So they can come back to us to do this. There's a question too about allowing the marketplace to look at your income data, specifically your tax returns for the next 5 years. If you are filing taxes, the reality is the IRS is looking at your income. So the consumer may be concerned by that, but obviously, if they are filing taxes, they're already giving the IRS this permission. Finally, at the very end here, there's a question about whether the consumer reconciled a premium tax credit for the past years. This is important. If the consumer had a tax credit in 2016, but they either haven't done their taxes or haven't done that reconciliation step, so maybe they did their taxes but didn't bother or didn't take the step of that reconciliation, they will not be awarded a credit for 2018. The IRS has sent out letters to pretty much anyone in this predicament, so you can take them at their word. If they say the answer is yes, feel free to check that box. If they're not totally sure, definitely leave the box unchecked because the application is smart enough to know whether that reconciliation has happened. So if they don't know, don't answer the question. At the end, you're going to have the consumer sign the application under penalty of perjury, which means they've provided true answers to all the questions to the best of their knowledge. And it says that they know they may be subject to penalties under federal law if intentionally false information is provided. So they need to sign their name there. And by sign, I mean type. This is one of the two instances where you pass the keyboard to the consumer and let them sign themselves however they wish. It can be an X, they can type their full name, whatever they feel inclined to do will be fine. You'll get a screen like this while the application submits. And then you will receive eligibility results. And this is that eligibility result page. So a couple of things to call attention to. It'll let the consumer know what tax credit they're eligible for. It will let them know they're eligible for lower cost sharing, co-insurance, etc. on a silver plan. And if there's proof being requested, they'll get a little red notice under that lets them know their eligibility is temporary, that they have 3 months to submit proof to the marketplace. And what that proof is, you'll figure out in their eligibility letter. So underneath that, there is a option to open the letter, which you would want to go ahead and do. And you would want to print for the consumer the pages through what should I do next step, because that's what's going to tell them what proof they need to submit. And this is where step 5 on the tracking form is going to be so important. So the letters come in this funny chart format, and you'll notice the first part of this chart for Mark Morales is saying that they're eligible to choose a marketplace plan. They're eligible to choose a health plan with lower copays, co-insurance deductibles. You can see that 06, which you may or may not remember is connected to cost sharing. And then it will also let them know the tax credit they're eligible for and the income estimate that is based on. So that 06 used to be very meaningful. Now I will warn you that just recently that has gone away, but it doesn't matter because you're going to already know. 06 used to be the code that indicated the person was eligible for a cost sharing of 94%, but the 06 isn't something you necessarily have to use. You can always look at the chart to establish, oh, they're a household of 4 with an income of $30,000. That means 06. So while the 06 was certainly helpful for our purposes, it is not appearing in letters anymore, which is not a big deal. That's what our chart is there for. Likewise, you can see there is a tax credit, very important, the monthly amount, and then the income that tax credit is based on. Scrolling down, you'll see what should I do next steps, which lets you know that Mark needs to go ahead and submit proof of income. So for Mark, the part that doesn't really work here is that proof, because it should be 90 days from the date of the application, but this is how it would work for Mark.